All right, welcome back to another episode of Forex Tech Magazine. This is your host, Lewis. Hope you guys are doing well. Another day closer to Turkey Day for the folks that's here in the States, and those of you who are not, don't know what you're going to be missing. Hey, but listen, before we get too far into this, I want to knock out that disclaimer real quick. And disclaimer goes a little something like this. Any and all information that's given to you by Forex Tech Magazine should be considered to be educational and for entertainment purposes only. Nothing that we share with you should be considered to be financial advice. If you are in need of financial advice, if you're seeking financial advice, our suggestion to you would be to seek out the assistance of a licensed, competent advisor. All right, now we got that out of the way. Let's get into why you came here. This is the $100 to $100,000 challenge, right? And this episode or these episodes in the afternoon are dedicated solely to that process or that project. And what we're going to be doing, oh, I'm sorry, let me close out this right here. This is our London day trading strategy information here. We're not working on these currency pairs. Let me just go to a generic one here. Here you go, Euro, US dollar. So anyway, what we're doing now is with this particular episode and with these particular episodes here starting at 5 o'clock in the afternoon, I'll whip to about 5:30. And unfortunately, today I started late. I do apologize. Essentially, what we're going to be doing is looking to place trades in the smaller account that we have. It's a live account with real money in it, but it's a real small account, right? There's only like $100 some inside that account. And what we're going to be looking to do is place trades in that account and build it up over time through our trading process and see if we can't hit that 100,000 mark. And we'll see how long it takes us to do it and what strategies work well with us doing this. So with that being said, let's kind of get into a little bit of analysis here, all right? Look at a couple of currency pairs. I'm not currently in any currency pair at the moment. The last one I was in was the CAD, the US US CAD, and with that particular pair right there, I was going along the Canadian dollar, and unfortunately, at the time, I was at a point of resistance up here with it, and it did not come down soon enough before we got that margin call. So unfortunately, we got kicked out of that one before we could actually start making money. But it does feel nice to know I was right. If that means anything, which it really doesn't, because I can't buy anything by me just knowing that I was right. But it is what it is. And if you hear anything in the background, just do not pay attention to that noise. It's just got some guests over, and they are just doing some stuff in the house right now. But hopefully soon it'll settle down after they get opportunity to get them something to eat. Anyway, so let's go over to a currency pair that I think may show some promise for us. So let's go with the Canadian US dollar. I want to look at this right here for a second. All right, now we have a situation where this thing was going down for a period of time. I hit a major support level, looks like, and then bounced up and is going back up to resistance. And now we have a situation where price is either going to go through resistance and continue up to the second level or major level of resistance, or price is going to go ahead and U-turn it and go ahead and go and come back down. Just looking at this right here, I think there's a possibility for it to come back down, but I want to check something. I want to see what the smart fibs say on this particular one. Price pull back. Smart fibs say it could potentially go up to this resistance here. And I got to tell you right now, we're close to a resistance level, and normally I like to sell at resistance, right? Price is obviously trending downward, right? The only thing that kind of scares me about this particular pair is that it has made new lows, higher lows, and higher highs, right? And when you see that going on, higher lows and higher highs, that means that the price is moving up, it's trending up. And so right now at the moment, it appears to be that price is actually trending up. So this one right here will probably be a no-go for the moment, just because of that. And what I mean no-go is a no-go as for shorting, right? Because obviously looking at this particular pair, because it's trending down, right? Ideally, I would be looking to short this particular pair, or at least short the Australian dollar. But because it's been making higher highs and higher lows, I don't know at this particular moment if this will be the actual ideal opportunity to do that. So may want to stay on the sideline for this particular one right here. See if we can find something that's a little bit easier to trade, right? Or at least give it a day or so before we go back in there and try to trade it. A lot of times when you go in and try to trade these things, excuse me, get some water. A lot of times when you go in and try to trade these, excuse me, you can get caught in either a bull trap or a bear trap, and what that essentially means is that it is the setup is giving you the appearance that this is going to be a bullish push. In all actuality, though, is bears just kind of setting you up for you to get into that position, and then the price just drops down, and vice versa. You can be setting this up and thinking that it's going to drop because you're right here at resistance, and then bulls come in and continue to push it up. So with this one right here, I would my recommendation on this right here would be to just kind of sit tight. Let's look at the price action on this and see how it plays out over the next couple of days, next 48 hours. Given the fact that we're getting ready to go into a major U.S. holiday, putting on a trade right now is going to be kind of difficult, especially with any U.S. dollar pair, because you're just not going to get a lot of movement out of the American market over the Thanksgiving weekend period, right? So it's probably better to stay just put until next Sunday. Right, if you don't have to. Now, if you already got a position in place and you're locked in, then go for it. Or if you're trading one of the, Great Britain pound, Aussie dollar, Great Britain pound, Canadian dollar, Great Britain pound, Japanese yen, something like that, stick with it. But if you're just looking at something that's paired up with a U.S. dollar, I probably would just kind of stay on the sidelines with that for right now, just because this U.S. holiday is coming up, and it's going to probably trend sideways and not really make any sense, and you're just going to be sitting there getting frustrated looking at your account. All right. With that being said, let's look and see if we get some other ones here that looks like it may be some good opportunities. Let's see here. Let's look at the U.S. Let's see the Euro U.S. Once again, just kind of looking at this at first glance, looks like it's going down and to the side. Let's look at it from a monthly standpoint. On a monthly chart, still going down to the side. Wow, look at this. Yeah, so this right here might actually be one that we could look at potentially shorting here. What I'm going to do right now is going to put in some support resistance lines, and those of you who haven't heard the speech about support resistance lines, let me give it to you real quick. Essentially what support resistance lines do is kind of like when you're at the mall and you see that sign that says "you are here." Right, this right here lets you know where you're at in relation to your trade. Right, lets you know where either you are approaching resistance or you're approaching support, or you're bouncing off of resistance or you're bouncing off support. These things are important, right? Because if you're near resistance, then you're probably going to be looking to sell, and if you're near support, you're probably going to be looking to buy. Now, once again, this is a Euro US dollar, so this is going to be a tricky one. I just saw that. And if you look right here, based off of price observing support resistance in the past, price pulled down below that resistance and it bounced back up immediately, right? And now it looks like we're on our way to this level of resistance here. So that's about how many pips away? So it's about 53 pips away. So interestingly enough, if you want to come in and make 53 pips real quick, you can come in and just place a trade here. If you're using a micro account, that's $5.35, which, whew, I don't think you're going to Vegas and about to retire off of that. If you're using a mini account, that's going to be about $53.50. And if you're using a standard account, that's about $535 right there that you can make, and it's probably going to hit probably within a day or so, right? Just to give you an idea of what you're looking at here. because it looks like price is trying to retrace back up to resistance. Now, there's no guarantee that it will, because if we're noticing here, if we're looking, right, and we've been students of the game, we see that price is moving down. So that means that price is subject to continue to move down, right? Even though it just bounced off that resistance, that support. But just kind of given that big drop and then this big push here, it looks like there's enough. Looks like there should be enough wind within this cell right here to go ahead and push this thing up to hit that, at least hit that resistance before it drops back down again. Now, am I right about this? I don't know. I could be right. I could be wrong. Right? This is just my best guess, my best estimate. With anything, what I would do is I would put in a stop loss, of course. Right? I put in a stop loss with this. And the reason why I put a stop loss in is just because, once again, you're so far away from support, right? You're on your way up to resistance. There's no guarantee it's going to hit resistance. It could just stop here and then start back down to support again, right? It looks like the completion of the Fibonacci sequence for this one is at, what's that, $1.119, right? So right about here, we came close to hitting it, but we didn't get it. So that means that it still is probably looking to complete it. So that's a long ways down from where you're at now currently, right? So my suggestion would be this, and this is probably the trade that I would rather take versus the one to just get the 53 pips. For this particular pair right here, what I would rather do is wait to see the price hit resistance, and then once it hits resistance, right, and it begins to make its way back down, put my take profit here in this fib number, right, because we see what price tested below support previously, but wasn't able to make it. So there's a good opportunity that price will try to test below the support again to hit that Fibonacci sequence. And then what I would do is probably place my stop loss a little bit above wherever the U-turn was above this resistance line. That's the play that I would probably be looking to make on this particular one. If I trade it, but I don't know that I necessarily will trade it. So let's see if there's something else a little bit more interesting to trade. I'm not going to mess with any of the Great Britain pound pairs, and the reason being is because we trade those during the U.S. market. During the London Open, and I want to just stick with doing that. I don't want to mix them into what we're doing with this other stuff. Okay. Now this right here is a pretty pattern here. And I don't know how many of you guys recognize this right here, but this is the double top, right? So this right here is a good push up. This right here is your first top, right? Hit resistance, right? Price goes down, comes back up, hits resistance again. Price begins to go down. Once it closes below the neckline, then you can just pretty much expect price to just go. And that's what it did. Once it closed below that neckline, it just went on down here. So kudos for whoever saw this early on. This is back on the 25th of October, right, when this thing really started forming. It's like it closed below on the 29th of October. Anybody that saw that made money off of it, good for you. How many pips was that? Wow, it's 410 pips. So that was really good. Once again, micro lot, $4.10. You're not quitting your day job with that one. Mini lot, $41. Standard lot, that's $410. And kind of understand this right. That happened over a couple period of days. And when we're talking about a standard lot, and we're saying, it's $410, $410 is not that much money. You're right, $410 is not, the end of the world type money. But this is what you got to understand. It's the power of compound interest, compound growth, and the power of leverage that gives you your ability to be able to generate, a significant amount of money in a short period of time with trading Forex or futures accounts, right? And that being said, even though, when we look at it, we say a standard lot, right, which is $10 a pip. You don't have to just trade one standard lot. You can trade two standard lots. So now all of a sudden you get $20 per pip. So that same 410 pip move, instead of being, $4,000, that's what it would have been. I apologize. I'm off of my math. It would have been $4,000. Well, now it could have been $8,000, right? What if we trade three, standard lots. Now all of a sudden it's $30 a pip. Are you starting to understand the math now? Now we're talking about $12,000. Are you you got to understand how you can use this. Now the problem is a lot of folks, they think they know how to use this and they think they understand leverage, and they get in and what do they do? First thing they do is they over leverage the account, and what happens is they wind up getting out of the trade way too early, right? Because the account pulls back and gets one of these right here where, oh my goodness, I know I've seen this pattern before. I know exactly what to do. I'm just gonna go ahead and jump in here and bet the farm, right? They over leverage it, put the money in, then all of a sudden, you get a pullback, and when you get that pullback, that's when they look sick in the face, because now all of a sudden the account didn't have any room to move. You get a margin call because you have to have a certain amount of money inside the account in order to keep the account open, and once you exceed that limit, they're going to automatically close out that account. And that's what happened to me with that Canadian dollar trade. Unfortunately, I had the opportunity to put more in there to keep it going, but that was just me being stubborn. I didn't do it. Hindsight is 2020. I wish I would have had. Nah, not really. I just didn't want to do it. When you manage your losses and when you understand about your risk management and you understand about how much you should risk and how much you shouldn't risk per trade, you get comfortable with getting a stop loss or something getting knocked out, because you understand, it's no big deal. It happened, but I'm never going to risk more than what I'm willing to lose. And the reason being is because if you start risking more than what you're actually willing to lose, you risk blowing up your account, because it's a very slippery slope to start down, and it's one that you definitely will pay for it in the long run, and not in a good way. So anyway, looking at this particular trade here, it has this thing came to an end. Let's see something here. I want to say this is probably done. Got a little bit of a pullback. I'm gonna tell you the reason why I wouldn't do it, and I just put the fibs on there. But this is the reason why I wouldn't do it. All right? Because once again, let's look at our handy dandy support and resistance lines. Okay? Let's put these out here. And we're going to put this up here. Alright, boom. Alright, so let's see what we got. Bam. So this right here is pretty major area of support. Price already crashed through that support, came back up immediately, right? So I probably won't be looking to sell. You don't want to be selling this support. Now, could price continue to go through this thing and go down? Absolutely it could, but I wouldn't sell until it did go through this thing and go down. It'd have to make a serious move through this and then maybe get another day's worth of candlestick information to confirm that this is what price wants to do. It's just not a head fake or a fake out, right? Sometimes you get dead cat, what they call a dead cat bounce, right? Think about taking a dead cat and throwing it, slamming it on the ground, right? I know that sounds disgusting, but you may get it to bounce up just a little bit before it just falls back flat, right? And so sometimes when you get priced and it crashes down and it hits the level of support, same thing will happen. Buyers will come in, push the price back up, and it only go up for like maybe a day or two before it just finally comes back down and continues to crash back down. You hover around that support line. Given that type of information and understanding that, I would probably, if I was going to buy this thing, if I was going to sell this thing, I'd wait until it actually goes through, makes a another price confirming move downward, and then get in to sell and put my stop loss back at a swing high or swing someplace. Vice versa, if we're looking to get into buy, this might be a good area to buy, right? Go in, put in our buy, and then put in our stop loss somewhere back here, right, below that swing low, right, and then put our take profit up here, right, at this support or at that That resistance up here. So let's see, how many pips away would that be if we got in now? Oops, let me go back. Let's see, we'd be looking at 188 pips. So you're risking 177 pips to get 188 pips. So it's almost a 1-to-1 risk to reward ratio, which, it's not knock your socks off. It's just basically saying that, you're willing to risk what you're willing to win. That's it, right? Typically, what you want to do is you want to be willing to risk less than what you're trying to get. So, in other words, I'm trying to get 188 pips. It'd be nice to only be risking maybe 60 pips to get that 188 pips. That'd be, really cool. Because I could take a couple of losses in a row, right, and then just hit one time, and then all of a sudden, all the losses are erased, and I'm back positive in my account again. That's how we play the game. But given the situation right here, I would say that it is probably, I don't even want to say it's probably. Given the situation right here, I like this move. I think this right here is a nice bullish move up. Even though I see some wicks on here, I see a long wick at the top and a long wick at the bottom. And the wicks, it simply means that, hey, this right here is where the candlestick opened, right? Bears pushed it down at some time during the trading day. Bulls came back in and pushed it back up. Pushed it back up, right? Really up. Bears came back in and pushed it back down before it closed, and that's why you have this long wick up here and this long wick down there. Looks like bulls are overall in control of this particular trading day. Although bears did come back in the market to try to force some selling. I just don't know that there's enough bears in the market to continue to keep pushing it down. I'm looking at this right here. This is a pretty big move down. Remember we talked about it before, about market taking a breather. This could just be the market taking a breather before it begins its push back down. That's why it's so important, if you're going to trade this particular trade right here, to make sure a couple of things. One, you use a stop loss, and just be ready. And I'll tell you what, honestly, this is not the one you want to go and try to risk it all on. And it's definitely probably not the one you're going to want to try to put, that you're not going to want to try to go long on. I would look at this right here just as the market taking a breather and just wait for the continuation for it to continue to move down. If it does move up, if it does go up, there's going to have to be some things that's going to have to happen. One is going to have to make a significant move up, and then it's going to have a pullback, right? And create a higher low, because this right here is the current low right now, so it needs to create another low that's higher than this low, right? And then it needs to create a push up. And that's when I would probably try to get in on it after it makes that higher low and it begins that push up. That's when I would be probably looking to buy. If I'm going to buy into this market, wouldn't necessarily buy right here, because this right here, like I said before, it could just be the market is exhausted from all this selling off, right? A lot of sellers came in here and sold. Some buyers think this right here might look kind of good, and so they're coming in here and buying. If they really are, and this really is a buy type scenario, then what's going to happen is more buyers are going to come in, they're going to push up, and then the market's going to pull back a little bit, and then it's going to push back up again. If you don't see that, I wouldn't buy it. All right. So this one right here, I'm going to probably stay on sideline on this one too for right now. Not doing that one. Let's look at the US dollar, Japanese yen. This is a wacky pair. Always has been, always will be. Never really like trading it. And one of the reasons why I never really like trading the US dollar, Japanese yen is just because the yen is such a manipulated currency. I mean, it's one of those things where, it's the unspoken rule of this currency that, they will manipulate it. And what I mean by that is that they love to devalue their currency. The US dollar, the Japanese yen, and the Swedish krone, they're all pretty much safe haven type currencies, where what I mean is that when there's instability in the world, chaos, people trying to look for direction, they tend to go and float money into these currency pairs. And the reason being is because those economies are pretty much are very stable economies. I mean, pretty much all commodities are priced in US dollars, right? I mean, I know that they're in the process of trying to switch over that, but for right now, everything's pretty much priced in the US dollar. So if somebody in I don't know, Kalamazoo wants to go buy some oil for Saudi Arabia, 9 times out of 10 they're going to be using U.S. dollars to pay for that barrel of oil. They are in the process, like I said before, using some other currencies to try to alleviate that, try to take the dollar out of rotation, but it hasn't happened as of yet on a large enough scale to really affect the U.S. dollar as being a safe haven currency. And until it does, it is what it is. And once again, the Japanese currency, just because they're such a technologically advanced nation and they are such a stable trading partner with a lot of the world, their currencies tends to be one of those stable currencies that people like to kind of float to. And then of course, Sweden, everybody loves the Swedes. Like the bankers to the world, right? They don't get any type of major conflicts. You don't hear anything negative about them. You don't hear about them invading their neighbors or somebody trying to invade them or nothing, right? So once again, it is considered to be a pretty safe haven currency. Well, guess what? It's like anything else in life. When there's a huge demand for something, it goes up. The price of it goes up, right? So when there's a huge demand for dollars or there's a huge demand for Japanese yen, the price of the yen goes up. Now, this negatively affects the Japanese ability to be able to trade with their neighbors because now all of a sudden, right, where I came in and I worked really hard for the whole week and I got $5 and I want to go and buy an Xbox or whatever it is that they're making over there in Japan, right? 2 days ago, I could have got one for $2, right? But because there's such a demand for their currency and everything is going up, so now the price of everything that I buy from over there is going up relative to my dollar, right? So now all of a sudden, instead of costing me $2 to buy the Xbox, now it's going to cost me my whole $5. Well, I'm not going to give you my whole $5 to buy the Xbox. I'm just going to go and take my money someplace else, maybe to, I don't know, Brazil or someplace, whereas, I can still get that same Xbox for maybe $2 or $1.50, right? And that's the reason why they come in and they devalue their currency, so that way things are not expensive for their neighbors to come in and buy stuff from them, right? They want to keep their currency cheap, so that way it won't cost their neighbors a lot to go and buy and purchase things from them, and people won't go and start buying stuff from their competitors, right? That's one of the issues that the U.S. has with China, and China keeps saying that they're not manipulating their currency, but it looks like a duck, quacks like a duck, walks like a duck, and it's probably a duck. No. But anyway, so getting back to this currency pair here, so just kind of be on the lookout. If you do intend to trade this pair here, just kind of understand that this is one that, everything could be looking perfect, could have the perfect setup, everything could be going, exactly like you planned it. And as soon as you place that trade, all of a sudden it gets blown out of the water. All right? Don't blame yourself, don't kick yourself. It's just the nature of what could happen when you get into trading like the Japanese yen, the US dollar. So let's look at this right here. This right here appears to be, it appears like it's going up, right? And looks like we had a bottom here, went up, a bottom here. So this could either be a double bottom, first bottom, second bottom, broke the neckline, went up, which it didn't do much when it did went up. Or it could be forming the second bottom over here. So let's do this. Let's put some support resistance lines on the table, see what we got, see what we're looking at here. Boom, boom, boom. See if we got anything that looks like anything at all. If we should actually be trading this, or we should be sitting on the sidelines doing something else with our time. That one there. If you happen to notice, I just put the line on this one right here because that's that support level right there. Actually, I'm bring it down to this one right here. Brought it down to this one right here. Let's see what we got. Boom, boom, bow. All right, so it looks like price went up to resistance, came down to support, hit resistance, went up to major resistance, came back down to support, went through the major resistance, and it's on its way back down now. Looks like we're in a position to be able to short the yen. Looks like I'm sorry, not short the yen. Apologize. It should go long the yen, right? And so if you're looking at a U.S. dollar Japanese yen trade, looks like you're probably going to want to be shorting this right here, right? And I would be looking for. I'd be looking for a take profit. Actually, I probably wouldn't even try to come back down to this level of support. I'd probably be looking for something, take half of the money off the table here. All right, so this is how I would play this. Once again, I don't know if I'm going to do it or not. I'm thinking about it, kicking it around, mulling over the idea. Oh, sorry. I would probably. All right, so I'll probably, okay, so if you put on this trade right here, right, so let's say we did do a standard lot, right, or we did 2 standard lots, so whatever, right, so we did 2 standard lots, that's $20 per pip, right. What I would do is I would play that all the way down to here, and then what I would do is take off half of that, and so instead of doing $20 a pip, now I'd be at 10, and then take that remainder all the way down to this level, this final level of support right here, and then that'd be my final take profit. If I was looking to do this trade, that's how I probably would trade this one. And you say, well, why do that and not just take it all the way down to 20? Because this area right here looks like it has been support for this particular pair in the past, and there is a high probability that it could continue to be support for this thing in the future, right? We did get this one push down to hit this support level here, but that was just one versus 1, 2, 3, 4, 5 times price touched this area here and decided they wanted to push back up, right? So that lets me know that there's something special about this area where buyers tend to kind of get in here. And if we're going to have a push all the way down here, it needs to be some type of a catalyst. And once again, if we're able to get $20 a pip all the way up to there, that's actually a nice, that'd actually be a nice little chunk of money right there. How many pips is that? That is 60... 64, so it's not bad. 64 pips. 64 pips. It's about $1,200. $1,200, and then you get an additional. Then you get an additional $327. So that's not bad. About $1,500. About $1,600 altogether. When it's all said and done. Oops, don't want to do that. So it's a good possibility here. The only thing about this one right here, the only caveat I'll put on this right here, I probably would trade it off of the hour chart instead of the daily chart. And the reason being because if we can do it on the daily chart, we're going to have to put our stop loss way back up here. And that is a huge stop loss to take, right? That could be a huge drain on your account. Yeah, it's like 180 pips. Don't want to do that. If you come down to like an hour chart, all right. Essentially, what you're doing is looking for the same setup. You're looking for a pullback, right? This is the hour chart. You're looking for a pullback, and then after you get the pullback, you know, like this right here is a pullback here, right? When the price went down, kind of went straight to the side. Could have got in here. Boom, price go down. And the reason being, because you want to put your stop loss like maybe somewhere right here, right? Because this area here has been some type of support area before, right? And what we talked about before, support can sometimes change into what? Resistance, right? So put your area, you know, back here. If price is truly going to move down, it's going to continue to move down. But now, instead of doing 180 pips risking, now you're only risking about 38. Or whether it's 38 pips to get $1,600, so it's at $380. Or whether it's $380 to try to get $1,600 versus risking $1,800 to get $1,600. Wouldn't make too much sense. If it does make sense to you to do that, then you probably don't need to be trading. You need to be doing something else with your life. Okay. All right. Let's see what else we got here. Still don't know if I really want to trade this one right here or not. Looks like my time is about up, guys. It's about 6 o'clock. So I started late today, so I wanted to stay late just to kind of make up for that time. I do apologize. I do thank you guys for tuning in. and checking me out. I'm going to go ahead and get through the rest of this on my own. I mean, I think you pretty much saw what we were doing here. And I'm pretty sure you pretty much understand if you've been following us for any amount of time. Put your support and resistance lines on the board. Check where you're at in relation to the market. And then you can kind of tell whether or not it's a good idea. If you should be looking at something to buy, you should be looking at something to sell, if you should just be kind of sitting on the sidelines and waiting for the market to kind of develop out. Remember, we're coming up on a holiday week. This is a holiday week, so it's going to be, and it can be tricky. So please be careful while you're trading. Use your stop losses and use common sense. Okay. Anyway, guys, if you guys got any questions, give me a hit me up at questions@forextechmagazine.com. You can also hit me up on Twitter. You can find me on Facebook. You can hit us up on Instagram, and we're also out there on YouTube, YouTuber, right? Anyway, take care. God bless, and I will see you at 3 o'clock in the morning if you're up and ready for the London Open, right? Anyway, take care. Bye.